Good evening, everybody, and thank you all for joining us this evening. For those of you online, as well as those who joined us by telephone, I certainly appreciate you coming out, and I appreciate the support. Tonight is the second episode in a series that we started last week, and it will continue on every Wednesday. And what we are going to be discussing basically is problems, real problems with tax authorities, the fears that many of us have, and how to be able to deal with the problems and hopefully be able to dissipate some of the fear that people certainly have when it comes to the tax authorities. So, having said that, last week we covered about 10 or 11 different topics that, or I should say, items that people fear whenever they encounter a tax problem. We spoke about you receiving that dreaded letter by mail. We spoke about how to deal with getting the call to meet with the IRS. We spoke about the fears that you may have heard from others regarding, IRS agents coming to your place of business or home, or the IRS Criminal Investigations Division raiding your house or your place of business, and what each one of them really means in reality. So we don't really want to go back over what we spoke about last week. What we are going to be discussing this evening is a more expanded version, if you will, as to what is each one of these situations means. What is the meaning of such an event in your life? Okay. So, for example, okay, if we were to just look at someone under audit, okay, what does that exactly mean? An audit is an examination. Okay. Now, the problem is a lot of people, they feel like you have a bookkeeper that's taking care of your business accounting, or maybe he or she does your income tax once a year. Okay, the IRS called about this. I think that's who I need to show up with me. If you all remember last week, we spoke about that the worst thing that anybody can do is make the client, the taxpayer in question, available to the IRS for questions. So having said this, I think we covered that subject thoroughly, okay, in our previous conversation, not to do that. Okay, second thing we spoke about is why you should not try to handle this alone on your own. Number one, you're too emotionally close to the situation. You're too emotionally involved. One of the things that I want to hit on again, and I want to go back and I want to cover that again, is the fact that the IRS in their Internal Revenue Manual, which is the manual that they give to their agents, which is their field Bible, they encourage their agents to use methods to put fear in you, okay, intimidation. They're even allowed to tell you mistruths. Let's call it what it is. It's a lie. They're allowed to use anything and everything available to them to achieve the objective. And the objective, by the way, is always about collecting more taxes. So having said this, okay, we liken the IRS to the world's largest collection agency. And as a collection agency would do, they're going to come after you to collect as much money as they can possibly collect. Okay? Now, the second thing is you cannot ignore them. So once that they have approached you, you cannot ignore them. Now, one of the things, and I appreciate the feedback. I really do. This is what this is about. It's an exchange of ideas. Okay. One of the things that I appreciate is the feedback that I got last week. Okay, that I was addressing issues in many cases that have to do with people who are not middle class, above middle class. Well, tonight I am dedicating the topic completely to middle class and lower income, okay? Because these are the problems that occur every day, and unfortunately, most of the time, the lower end of the economic ladder do not get proper representation when they get into a tax situation. Having said this, let's start with this. One of the number one areas that taxpayers get in trouble, the middle class and the lower end of the scale on income, that they get in trouble with the IRS or with tax authorities on is Earned Income Tax Credit, EITC. EITC is the number one area that taxpayers get in trouble. Okay, so let's examine that first. Earned Income Tax Credit has a series of what the IRS calls tests, that you must meet these tests. And when you have met each and every one of those tests successfully, you are entitled to refund than the amount of tax that they have withheld and that you have paid in. Now, so if it's that simple, or if there are requirements, or if there is a test to pass, then how does the taxpayer get in trouble? Very simple. There's a lot of unscrupulous tax preparers out there. And these unscrupulous tax preparers, now, to get clients, they say, how much is he going to get you in a refund? I could get you a bigger refund. Wonderful. And, of course, the economy being what it is today, that's a great motivation. You want to get a big refund. You want to get back as much money as you can possibly get. So why not? So that's one area. The second area is some taxpayers, one of the requirements, okay, that are not really their dependents. And if it's not their dependent, you're going to get caught. Because in many cases, especially in areas or in parts of inner cities, let's just call it that, which is lower end of the economic ladder, what happens is, unfortunately, is that there's a lot of people who buy and sell dependents. Yes, you heard me correctly. Let's call it they rent their children out. You have a lot of households out there, especially single-parent households, that she may have 6 or 7 kids, and she has no income to claim, so she doesn't get a tax refund. What she will do is that she will rent out those kids, that's exactly what it is, to someone to file income tax, claim 2 of her kids or 1 of her children as his or her own, thus creating the scenario for the Earned Income Tax Credit. Because it goes by the size of the household, it goes by income level, it goes by the other variables that go into those series of tests, okay, that allow you to qualify for Earned Income Tax Credit. So why would she do that? Well, let's say that each child is worth $2,500. She'll say, you could use my child, here's the birth certificate, here's the Social Security card, okay, and you pay me $1,000. It's not a bad deal if you want to take that chance It is a crime. I want you to know that. You are committing a crime. It's not a joke. So you're pocketing $1,500, you're giving her $1,000. What do you care? Well, you should care. Because what the IRS does is that they want to see who claimed that child last year. And then it could be a year from now, and you're not claiming that same child. They want to see who claimed that child next year. And then you get called in. Now, the tax preparer, 99.999% of the time in these geographical locations, in these areas, is completely aware that you are not married, that you're not really head of household, that you don't have the qualifications, that this is not your child, but hey, because he's getting you a big tax refund, and he is doing what they call a rapid refund for you. Instead of charging $250 or $300 or $200 for your fee, is going to charge you $600, $700, $800, $900. I have even seen as high as $1,100 in tax preparation fees by people who never ever have taken a tax preparation class and have never even graduated high school. They can't even speak English properly. And I'm talking about especially in Broward County in the state of Florida, because Broward County has a huge indigenous population of people who come from the island of Haiti. In fact, they don't say my refund. They say, how much money am I going to make? They actually think that they are earning this. Okay? So, how do you deal with a situation if you got into? Now, we have completely dissected the problem. How do you deal with the situation if you got into that type of situation? I want you to know you can be criminally charged. That should always be in the back of your head, because you have lied. You have signed under the penalty of perjury that what you are submitting is accurate and true. On top of that, you have taken money from the federal government that does not belong to you, because we said in a case where you're qualified for earned income tax credit, you are getting back more money than you have paid in. Well, if that's the case, then how do you deal with it? Well, this is where you need to engage someone who not only understands how this works, but understands how to resolve it. Someone, a firm, an individual, whoever you choose, that this is their line of work. This is their field of expertise. Okay? And that's very, very important, guys. That's really important. So the issue here is you cannot go back to that bookkeeper or to that tax preparer that filed that income tax return for you. And the fact is very simple. Okay, the fact is very simple. In all actuality, well, let's even bring it down on a separate level. Last year, my office represented a tax preparer who had gotten 1,400 of his clients in trouble by inflating their expenses. And when each of them began to get their letters from the IRS, he said, the heck with this. I got to look out for me. So the first thing that he did is that he came and engaged us. Protect me at any cost. Okay? I said, well, what about your people? He said, hey, you know, they knew what they were getting into. They knew that they were getting back refunds that don't belong to them. Now, you may find this shocking. Unfortunately, this is really the outlook of many of the people out there who are trying to get you back money that doesn't belong to you. He or she is not going to burn for you. So it's a matter of choice for you to do what you want to do, but please understand the risk. So in a case like this, how do we handle it? The very first thing that we do is that we have to amend the tax return. We have to put it in its proper picture. We have to see exactly how much money was issued to the taxpayer on top of what he or she was entitled to. Once that is established, at that point we have options. And these are types of items that we will be discussing on our DVD sets and on our program. Okay? I apologize. I am going to have to ask you guys to give me one moment. We have some people who are actually trying to join us. And unfortunately, they're getting a little bit of a problem here. So let me do this way. Okay. I apologize sincerely. But when someone is trying to come in, we want to make sure that they are able to join us. So I appreciate your understanding and your patience with us. And I will be done here in just a few seconds. Mercedes 0 188 626. Okay. Very good. So to get back to where we were, I apologize once again for the interruption. To get back to where we were, we have to establish exactly what the liability is. Okay. Now I'm going to tell you what's going to happen. The very first thing that they're going to do is that they are going to suspend your privilege of receiving earned income tax credits moving forward. And that would have to be restored at a later point. So even if the following year you did have legitimate qualifications for earned income tax credit, you have basically forfeited that at that point, simply based on the fact that you were engaged in that arena. The second problem they always see with lower income or middle class people that they get into trouble with is what we call Schedule A. Schedule A is one of the attachments to the Form 1040. Okay. Schedule A is itemized expenses, your itemized deductions. Now, we have in the past represented tax preparers and scrupulous tax preparers, okay, who engage in such behavior to try to pump up the refund for their clients. And they would touch areas that really you would have to be out of your mind to even contemplate trying to think about boosting them. For example, if you work a job and you're on a W-2, you do not deduct mileage for your car. Okay, you don't claim that because you're not an independent contractor. How you get to work is really nobody's concern. Your job could be next door. Second thing, if you're on a W-2, which means you receive a paycheck and there's tax withholding every week, you don't claim home office expense. And my favorite of all favorites, okay, is that there are some of the ethnic tax preparers that have found a way that they think nobody has thought about before to use as a deduction. Education. Well, there's a little bit of a problem with that. And the problem with that is you better have some backup if you are going to claim the education expense. And believe me, everything that you claim that does not have a 1098 attached to it somewhere, okay, the IRS is coming back and questioning. The IRS is coming back and saying, show us, where did you go to this school and how did you pay for it? And the last item that I have seen them touch up on is unreimbursed employee expense. Okay. I want you to know something. Buying a shirt or a tie while you are working on a W-2 job, which means you are getting paid a paycheck for a set number of hours, and they're doing tax withholding on you every week, what you wear is not deductible. Okay. The only way that that would actually work is for people in specialty fields. For example, police officers, they're allowed to deduct for uniforms, they're allowed to deduct for their pistols, they're allowed to deduct for their bullets and items that are necessary that are not issued by their police departments. Nurses, dental hygienists, medical technicians, you're allowed a certain number of scrubs to be deducted. Maybe specialty shoes if you wear the clogs. Okay, but if you are a clerk in an office, if you are a computer operator, if you are in any job that's just a normal run-of-the-mill job, and you put in there, I have $1,000 worth of reimbursed employee expenses, you will be questioned upon that. Okay, so now we have again dissected the problem. Where do we go from here? Okay, so how do we fix it? Well, again, the very first thing that we have to do, and notice, this is going to be part of every problem and every solution. Please take note of that. We are going to have to amend. That means bring the tax return back to the original form that it's supposed to be in, the true form that it's supposed to be in, to be able to find out what were you entitled to before these, let's call them anomalies occurred, okay? And what did you end up getting on and beyond that that caused the problem to be what it is? Once that hard number is established at that point, your experienced tax professional, he or she is able to proceed in one of a few directions that may be available to him or her. Okay. Now, having said this, please understand that it's not an automatic, like, oh, they're just going to give me a fine. No. If you go to the www.irs.gov website and type in CID, which is Criminal Investigations Division, you will see that they actually sometimes prosecute people for this. Now, having said this, we're not here to encourage fear. We are here to dissipate fear. We are here to tell you that there is a solution to every problem. So why do people get prosecuted? While the overwhelming majority do not. Because they try to cover a lie with a lie. They think to outsmart a stupid event by utilizing or using an even dumber or more stupid event. And once that is done, they're saying to you, you are not even repenting. You're not even sorry that this took place. Okay, well, now we're going to teach you a lesson. Let me digress for a moment. I had a client a number of years ago, stood in front of the judge in court. Before he was my client, let me make that clear. And he said to the judge, while the judge is questioning him, he said, I don't recognize your authority or the authority of this court over me. And the judge grabbed his own beard and said, oh, I bet we can change your mind. Let me tell you what, after 18 days in jail, that client called us and said, I will do whatever is necessary. Get me out of here, please. Okay, so a lot of times you precipitate the problem. You actually advance that problem. You actually make the problem bigger simply based on the fact that you did not choose to properly resolve the issue, but rather instead you are still holding on to the hope, which you know is a false hope to begin with, okay, that you are able to get past this. It doesn't work that way. I am here to tell you it does not work that way. Okay? It is just stupidity that is compounded by more stupidity. And in the end, the government has the courts, the government has the investigators, the government has the resources, the government has every which way, direction, whereabouts, will, and tool available to them to get you on the right track. So why play games? That's the first thing that you have to learn. Once you're caught, the very first thing that you want to do is put a lot of distance between you and that problem. And the only way that you're able to put that kind of distance between you and a problem is by properly and correctly resolving that problem. The third area that a lot of taxpayers on the lower end of the income spectrum actually find themselves in is a situation where in order for them to increase their refund, in many cases they would actually go ahead and invent a business that they were in, but in reality they really were not in that business. And by them doing that, what ends up happening is that they create this thing called Schedule C, which is self-employment. Oh, you know what? I do catering, man. I cook for parties. And then, oh, yeah, during my course of doing business and catering, what ended up paid $3,500. But by the way, I am such a lousy business person, it ended up costing me to make that $3,500, $5,200 in cost. Well, boom. There you go. You have $1,700 in losses to take away from any potential tax liability and add to any existing credits. And, of course, boost the bottom line for your refund. Seems harmless enough, doesn't it? Seems simple enough. Not really. The number one area of audit in the United States today by the Internal Revenue Service is what they call the Self-Employment and Small Business Division. They are the busiest division in the IRS. And years ago, I'm going to tell you, years ago, a lot of people used to get away with this. Years ago, the government used to buy the idea that, you know what, yeah, you know what, you could be in business and end up losing money and so forth and so on. They're not buying it anymore. They're just simply not buying it anymore. And now when they see that you are reporting a loss, they say, fine. Now what we want you to do is that we want you to go ahead and actually prove that loss to us. And that's when the fun begins. This reminds me, and if I may digress for a moment, of a client with a well-known company, but it was a small business nonetheless, okay, because of the way he was reporting. And when we got to, by the time that he actually engaged us and hired our firm, he had already gone through every possible civil procedure that he can go through, and now it got down to the criminality issue, and it got down to the criminal portion of that type of situation. And it needed to be dealt with on a very, very serious level, a lot more serious than if he or she was involved still at the civil level. The thing that I learned that day is that I was dealing with somebody sitting across from me, the examiner, who his biggest fear was that we happen to know more about various areas that he does not get involved with on a day-to-day. And because he does not get involved with these areas on a day-to-day basis, it made his position very, very weak. So therefore, it was our turn now, okay, to take advantage of someone who is completely unprepared for us. Now, why am I telling you this? We did not break any laws. We did not bend any laws. But our argument was far more compelling. Our argument was a heck of a lot stronger than the argument the government representative was putting up. And even though it had gotten to the level of prosecution, he did not have the tools, the knowledge, and the whereabouts to bring it forward to be successfully prosecuted. This is what you get when you hire people with experience. Now you ask, how can he work for the IRS and not have that essential information, or you would think that it is essential information for them to know. Let me tell you how the IRS works. If you work in this particular unit here, from the day you are hired, unless you're transferred to another unit, you are only taught, yes, you are only taught to know about what happens in this unit, and this unit only. They don't teach you. I'll give you an example. We had a case. It was a corporate return. And when we got to the point where it involved what they call the trust fund, which is the issue that has to do with withholding taxes on a weekly basis as an employer, the auditor could not go anymore because he did not know anything about the trust fund issues, about the tax withholding. They had to bring in an additional examiner who, by the way, she only knew about withholding. And that was a lot of fun because both of them would not agree on any one thing. And that made it even easier for us, okay, to be able to give our client a much higher level of protection with a far more advantageous outcome or result. Again, these are issues that seem simple when you are going to file your income taxes, but when you get caught, then they're not. And I'm going to tell you, even to fix them, it's going to end up costing you a lot more than you got in refunds. Now, having said the things that happen a lot in San Francisco, Los Angeles, Chicago, Detroit, Michigan, Newark, New Jersey, New York City, Atlanta, Georgia, is you have a lot of people with what I call unverifiable income. Okay? And they know some crooked, and I am going to use the word crooked, okay? They know some crooked tax preparers, and they invent income for them, okay? They actually invent income for them. And again, it goes into the whole self-employment. And they play with the level up and down, up and down, up and down, up and down until they get it just right to where you get a refund that you're not entitled to. I have seen cases where they invented income for people who did not even work. Again, what do you do if you get that call? Well, the very first thing that you have to do, like we said before, amend the return, bring it back to the level that it's supposed to be, and then we will take it from there once we have established what the true liability is. So, at this stage, I think we have covered the most basic problems that a lot of the people on the lower income scale actually have to deal with on a day-to-day basis. Now, there is one issue that has actually come up a lot over the past 7 to 8 years, ever since the crash of the real estate market. There's a lot of people who have lost their homes. And there's a lot of people who have sold their homes on a short sale. Okay. Banks are crooked, and I don't need to tell you that. Everybody knows that banks are crooked. I mean, the very first thing that should bring attention to this point is that the biggest building in any town is the bank building. Okay? And we're not even going to go into the whole thing behind the Federal Reserve and how banks actually end up lending you money that does not exist in the bank itself. Okay, we're not even going to touch up on that. It's called fractional reserve banking. We're not here to discuss that. What we are here to discuss is the effect of their crookedness on you as a taxpayer. So how does this affect you? Well, it's very simple. At the end of the year, once your house has been foreclosed and taken away from you, or your house has been sold on a short sale, the bank issues this little form called 1099-C, 1099-C. The 1099-C is cancellation of debt. They are reporting to the government, for example, that you had a $500,000 loan to them. After they take your home and they sell it for $350,000, you basically walked away with $150,000 of their money. hogwash, obviously, and maybe in future conferences we will discuss why and how that is hogwash. But they do report it, and the government looks at it and says, you have $150,000 of additional income, extraordinary income, taxed at almost twice your normal tax rate. So if your tax rate is at 8 or 9%, okay, you're paying 20% on this $150,000. It has happened to people who are very close to me, by the way. This is not something that I am telling you because I only dealt with clients. Some of my clients in this particular situation were people who worked for me, or in one particular case, he was a former partner of mine from many, many years ago, okay, and he ended up losing his home. And the guy, on top of all the problems that he had, he ends up with a tax bill for $87,000. $87,000. Of course, even though he was in the tax business and he's supposed to have certain knowledge, he panicked because he got better. Okay, and the very first phone call was prove that this was your primary residence. Okay, so we went in there. We were able to remove everything, okay, and bring back the tax return to where it's supposed to be by basically canceling out the canceled debt filing that the bank did. And every one of the scenarios that we spoke about, when you do receive that letter, or you receive that visit, or that knock on your door, I'm the first one to tell you it's a very, very scary ordeal. It's not natural to have authorities at your door. It's not a natural feeling. Okay, but what I am here to tell you, to reiterate to you, to reinforce as an idea in your head, to tell you with complete certainty that there are solutions. But those solutions are not available everywhere. It's not like going to the supermarket, and it doesn't matter whether you go to ShopRite or Pathmark, or you go to AMP, or you go to Publix, or you go to Winn-Dixie, or you go to Wiggly Piggly, or whatever part of the country you have to live in. Okay, they don't all have rice. They don't all have the same rice. Okay, to me, someone who always advertises every 5 minutes or 15 minutes on the radio, okay, that means he's not getting enough positive feedback from his own clients that they are referring people to him. I'm going to tell you, we've been doing this going on for decades. We have never advertised. Never. We don't need to, because people know us. People come to us. And by the way, we don't take every case that comes. We're extremely, extremely, extremely selective. There's a reason for that. Because I am not here to change a mindset. I'm here to resolve a problem. The client's mindset, or as they say, the client still has larceny in his heart. I am going to be fighting an uphill battle, and I'm going to lose it because the client is not cooperating with me to let me do it. Okay. Now, these are the issues that you are faced with. As a taxpayer, you have a responsibility, okay, to educate yourself. Even if you are looking to pump up your refund, even if you're looking to get a refund that you are not entitled to. What's it really going to cost me if I got caught? What is the cost to me if this situation goes out of control? What am I facing? Okay, you know what? You didn't do anything wrong. You have to look at it and say, how can I defend this? You know, we do continuing education throughout the course of the year. We are out there and mandatorily we have to attend courses and we have to attend seminars for continuing education, updates, and what have you. Now, one of the CPEs, which is continuing professional education, one of those seminars, we had a unit manager from the audit department, okay, at the IRS speaking. And one of the attendees raises his hand and he says, can you tell me the top 3 things that are found in almost all audits or the majority of the audits? And what he said really made sense, okay? He said automobile mileage and expenses, home use for business, and self-prepared. In other words, when you go and buy a piece of software off the shelf, or you are letting someone do your taxes for you who is not a professional tax preparer, does not have a PTIN number and a CAF number, and if you look at the bottom of the tax return that he or she did for you, it would say self-prepared. He said these are the 3 top triggers. Now, he's not saying that there are no other triggers. He's saying these are the top 3 triggers for audits. And why is that? Well, it's very simple. A lot of people, they sit there and they say, well, I think I drove 7,213 miles. While the tax return itself says to you, is this information documented on paper? And you have to say yes, otherwise you don't get the credits for it. Okay? Same thing with the home use of business office. How big is your house? What is the area dedicated or kept to the use of business? The electric bill. How much is your home insurance? How much is your home real estate tax amount? How much? And based on that, okay, this is the percentage that you use for business. This is the percentage of the expenses for the home that you can actually deduct as a credit. So if you're unprepared and you don't have the backup for this, the proper backup, and you get into an audit, you cannot make it up after the fact. Ladies and gentlemen, the worst thing that you can do after they have happened. And the third thing is self-prepared. Self-prepared, why is it a target? Because they know that if you did not go to a tax professional, chances are you really don't know what you're doing. So you're an easy target. You're a mark. Okay? The other part of it is self-prepared. Well, I'm going to help myself to a bigger refund, possibly bigger than what I need or should or possibly can have. We keep seeing these same problems year after year after year, and unfortunately, nobody is learning the lesson. Nobody is taking heed to what has happened before to others. You know, I have a brother who told me something years ago, even though he's younger than I am, and I truly cherish that statement. Even though it's very well known, I had never really thought about it until he said it to me. He said, only a fool learns from his own mistake. A wise man always learns from somebody else's. Part of these ongoing conferences that we hold is that not only do we tell you what a professional service can do for you, and by the way, I am not here trying to get clients. I want to be very clear about that. I'm not recruiting any clients. We have all the clients that we need. Okay? About education, about educating the consumer, about educating the taxpayer. Okay, so even when I make reference to my firm, I am making reference from a standpoint of experience, not a standpoint of enticement. Please understand that. We are utilizing our years of experience to be straight to you pictures, images, and relay experiences to you in the format of education and for educational purposes. So if you're going to learn from your own mistakes, it could be very costly, and in some cases it could be too costly. And by the way, getting into tax trouble is a very serious thing. Al Capone, they could not get him prostitution, drugs, running alcohol, extortion. They could not get him on anything. They got him on income tax. Income tax. The other thing is, I have someone who's a friend, and I'm very proud to call him a friend. But because of a tax issue, he is serving a 35-year jail sentence over something ridiculous, something stupid. I'm not saying this to scare you. It's stupid because it could have been handled different from the beginning. He could have been home already. By the same token, I have had a client who, by all rights, should have gone to prison. But because it was handled correctly in a timely fashion, expensively, may I add, but it was handled. Okay? I told him from the beginning, not a day in jail. And all praise and glory be to God. The man never even spent an hour in jail. It's not because I'm a fortune teller. It's not because I'm a psychic. But because I have learned over the years what can be done when it should be done, and what the more likely, if not most likely, outcome is to each and every situation. I don't want to take up too much of your time. Realize it is, and for those of you listening from Puerto Rico, thank you very much. I know that's even later for you. And for those of you on the West Coast, I know it's dinner time. I sincerely and absolutely appreciate your presence, and I appreciate your support. And I truly hope, that after each one of these conferences, you walk away with something. And I look forward to hearing back from as many of you as would like to give me feedback and let me know if you have benefited from being here. So I want to thank you all again for being here. God bless you all. Have a good night. And we will see you same time, same place, next Wednesday. Have a good night, everybody.